The world has been asking for a long time, are we truly in the era of decentralized finance? Why is the growth of DeFi so important for investors and people around the world? And more importantly, where do we see the crypto industry going from here? This is Wealth Huddle. Ladies and gentlemen, let's huddle up and get right into the game. Ladies and gentlemen, welcome back to the Wealth Huddle podcast. Let us huddle up and talk about how the game is actually changing and why Bitcoin is on a tear as of late. For those of you guys who have been following the crypto markets, a lot has been going on in the past couple of weeks, and this is something that we had anticipated during our last couple of episodes where we did talk about Bitcoin and the crypto markets. Today's episode will be focusing on decentralized finance, DeFi for short. This is simply a reference to applications that are built on top of the public blockchain. Mostly these systems are built on top of Ethereum, and they aim to create financial services without any centralized intermediaries. But before we get into that, let's talk about the crypto markets today and why they've been blowing up. First off, it's no secret, we have to talk about Bitcoin, right? Finally, Bitcoin has broken that 50K mark that happened earlier this week. And the first thought that a lot of people had is, man, this is very different from 2017. I hear all over, social media platforms. I have texts from my friends and people are saying, man, when is this going to end, right? Is this bear market is going to happen at the end of 2021? Is this growth all fake? Why are we still witnessing so much growth for Bitcoin? And I think there are a few reasons to that question, and I think most importantly, people have to remember with Bitcoin, it's something that it's interesting. It's the first asset that we've seen that has come back on multiple occasions from almost being devalued to being super valuable, right? This has happened to my remembrance, 3 separate occasions, but of course there are micro instances that are occurring on smaller scales. Right, we always talk about, I always warn people whenever you're talking about a bull market, the cycle, expect 30 to 40% pullbacks just on that growth alone. We had that earlier this year. Actually, funny enough, I had a friend sent me over a tweet from Anthony Pompliano, and I remember him reaching out to, or Logan Paul had reached out to him, and they said, yo, let's talk about Bitcoin. And then I remember I just commented, I'm like, all right, this is a good pullback sign, right? This is going to be a sell indicator for those people who are actively trading Bitcoin. But I remember I got a lot of people saying, oh, you're just, you're being a cynic and whatnot. But, just that weekend alone, Bitcoin went from 42K down to about 29.7 within a few days. So it's certain signals like that I always say, just be attention as to pay attention towards what's happening within the markets and who's talking about it. But other than that, I'm actually starting to even think that idea is not going to last a very long time, especially going forward. Because right now, with a lot of C-list celebrities, random people getting into Bitcoin, the institutions are actually here. This is the first time we're seeing so much money being put in. I'm sure you guys know, we were talking about it earlier, was Tesla. Tesla actually put $1.2 billion worth of their treasury into Bitcoin. A lot of other companies are going to be doing so. I know MicroStrategy, those guys are the holy grail when it comes to public companies putting their treasury into Bitcoin, added another significant portion or a significant allocation towards Bitcoin. So I think what we're seeing right now, I think at least within the next month, we're going to see Bitcoin possibly test the 60K mark, probably towards the end of this month to the midpoint of March. At which point I think there will be a smaller drawback again, where institutions will be rotating their funds. They'll be taking out some profits, things like that. With the amount of money that's in the market through institutions now, I think you can see those sorts of wild swings in Bitcoin's value, sustained swings, but still wild, because you'll be seeing a lot more of it occurring because these guys will be rotating their profits in and out. So my prediction is that Bitcoin will continue to grow. But for me, I still think the most interesting growth play in the crypto industry has to be in DeFi. And so I know I've been talking about it a long time. I want to give a little bit of a background to what DeFi is. right? So before we get into what DeFi is, I think we need to talk about some of the problems that are existing in the financial system today. And to my mind comes three, right? First of all, all you guys are familiar with what happened with Robinhood, shutting down trading, the whole entire GameStop, AMC situation. That we talked about it on our previous episode. We went into a deep dive as to what that problem really was. Again, it had to do with the settlement issue, not so much on Robinhood's front, but more so on the piping and plumbing issues of the public markets today. So, number one problem that I would talk about within our financial systems is that the payment networks and the trading, piping and plumbing are very slow and expensive, right? We talk about a T+2 settlement time that you see in stock markets, but also in retail operations. Sending money to different countries is so slow and it's riddled with fees, right? If you want to wire money to a family member, the next day, in the U.S. alone, it will take about $15 to $40. Internationally, money transfers can cost upwards of $50. On top of that, too, it's not an instantaneous process. Even with the SWIFT payment systems, which are your international wires, those can take days to settle. So these are things that, with the implementation of stable coins or the implementation of even other fiat-based currencies, digital currencies, we can see an improvement in our digital infrastructure. Again, let's just focus on the issues. So one, payment networks. Second, I think this is probably the biggest issue with our financial system, that most people actually lived unbanked, right? What does that mean? It's that 1.7 billion adults in our world today, as of 2017, are unbanked. That means that they don't have access to bank accounts, or the country's economy is struggling so much that their banks or the financial intermediaries or institutions cannot actually provide them with the same functions as a developed country, right? Today, if I go to a bank, I can not only just open a bank account, I can open up lines of credit, I can open up brokerage accounts, I can take out a loan, things like that. These are all products that are only offered by developed countries because of their banking infrastructure being so strong, but most countries actually don't have a strong banking infrastructure. And lastly, of course, this is my largest cry towards why we need adoption of these digital currencies or Bitcoin and blockchain in general, is that despite regulation and laws regarding transparency for retail investors, there's no way to actually fully understand what happens behind the scenes with financial institutions, right? Centralized systems, our governments, actually lack transparency to the public, whereas the public is providing them with all the information they need to, right? First thing that comes to my mind is the 2008 financial crisis, where Lehman Brothers and other banks masked high-risk subprime loans as safe investments, and then they underpinned the risk of it. And that's caused a lot of people to essentially foreclose, or they had to default on their loans. And that's an issue that comes because of the lack of transparency. Another example of that, again, for most of you guys who are familiar with what just happened with the Robinhood situation, right? None of you guys really would have, unless you looked underneath the hood and are crazy junkies like I am, you'll realize that it was an issue with the DTCC and the NSCC, right? The trading commissions that are in charge of the money and the insurance risks that go into covering people's positions. So those are the three main issues. Again, just want to highlight them. Payment networks that are slow and expensive, people having a lack of access to strong financial systems, and three, obviously, centralized entities, governments or their central banks lacking transparency. So now what I want to cover is decentralized finance, DeFi at a high level, right? Many of you guys will probably ask me, is like, look, Ion, I know for a while you've been talking to me about Bitcoin. You talked to me about the idea of this being the tool that will decentralize finance. Now, why are you talking about DeFi, decentralized finance, as a separate object now, right? And I think it's the comparison you have to think of is that without certain companies, the growth of the internet would not have occurred, right? You go back and think about Microsoft. You go back and think about even in the early 2000s, that the .com companies that were really carrying the adoption of the internet. And in order for an industry to develop, you have to have those sorts of prime growth examples, right? And I think Bitcoin was the one that started the decentralized revolution, because what they had done was finally provide individuals within the markets, where people who are used to money are used to a currency that's based off of belief, a currency is not really attached to a fixed supply. It's a currency that is usually associated with one country. Now what Bitcoin did was provide a decentralized solution that had a fixed supply, non-sovereign digital store of value, and it was the first asset, right? I would distinguish between DeFi and Bitcoin, as Bitcoin being the first asset that really implemented a trustless environment, right? Bitcoin's value is not only derived from its supply that's being capped at about 21 million Bitcoin at maximum in circulation, but also because of the fact that you're having a decentralized network of Bitcoin miners, the people who are constantly confirming transactions, looking to validate the blockchain itself, and helping mine new Bitcoin, and allowing for transactions to occur. Now, users, on the other hand, right, once you first get the assets, like with gold came in, and people are like, okay, this is what we can do with gold. We can utilize it to keep our, I have like 15, 20 different, let's say I've been farming. Now I can trade in those goods for gold, and gold will provide a stable value that will grow. It's a way for me to transact with it, right? So gold first started off as a way for banks. It was the earliest form of banking, and then from there, it became an application for transactions, which I think Bitcoin, if you guys have been following, is now starting to become, with the adoption of PayPal, even Amazon looking into digital currencies, right? A large, and Facebook Marketplace as well with Libra. So you're having all of these large payment institutions or payment companies, and Square as well, that are going to be leveraging Bitcoin for transactions. So, right, you've seen it go from an asset, and now will slowly become applied as a currency, which I personally wouldn't do, but hey, as you know, if it allows for more people to adopt the technology and for more quick trades and make more quick sales, I'm all for it. And then from there, I think that's when in 10, 15 years, you can actually, maybe sooner, let's call it 10 years, you'll see it become the global reserve for currencies. So that's where we're at. Again, so DeFi as a broad term for various financial applications that actually utilize crypto blockchain technology to solve problems that exist within the traditional financial system. So when we think about the current traditional financial system, what is it composed of, right? It's composed of banks, financial institutions, it's composed of investment bankers, it's composed of insurance products, is composed of, trading platforms and ATSs. So they're all centralized databases that's littered with people who are middlemen, right? These middlemen are seeking high fees. They're holding up the process. They want to take a cut of your, they don't want to take a slice of your cake. And that creates a lot of slow issues because there's validation that has to occur. There has to be agreements on fees. There has to be, and then on top of that too, once for the transaction that will actually go through, you have to settle the process. So it's not like there's only one middleman, right? Because actually that probably would help. There's multiple different layers of middlemen in the financial markets today. And I think the best example of it is like you as a college student or you as a young adult, if you're going to look into to buy a house or even to go and get a place to live during your college years, right? You're not just, it's not a simple process as, hey, I have the money today and I can just sign the paperwork and I can move in today. Instead, it's, hey, come take a look at the place. Here's the money. The property manager wants his fee. The landlord wants his fee. So there's a whole bunch of things that go into it. You have to sign a whole bunch of paperwork, and then you can finally move in after, a weeks or even months at a time. So there's so many intermediaries involved in that simple process, right? With DeFi, what will happen is these closed financial systems will actually be transformed into an open financial economy that's based on these blockchain protocols that are more accessible, have far less intermediaries, and by far more transparent, because all that information is going to be stored onto a public blockchain where everyone can verify the transactions, the information, the size of those investments, or even of the payouts that are going through these platforms. And I think the best part about DeFi is this simple concept of smart contracts, right? These new financial protocols utilize things called smart contracts. If you want to think what smart contracts are in a very simple way, it's just simply programmable and usable contracts that are digitized And the contract essentially gives you 1 + 1 = 2, right? Data input 1 plus the code 1 equals result 2. So what you're creating is a simple way for you to remove all of these people who will give you a headache and add nuance to your financial life. Instead, you replace it with computers, and the computers just take in data information, they take in your inputs, and provide you with an output. And usually this output is related to different financial services, let's say insurance, or with yield farming or staking, things like that. Now let's talk about the home of DeFi, right? So before I had talked about Bitcoin, and now we went into this new sub-industry that's called Decentralized Finance. But the home of Decentralized Finance has, and I believe it will continue to be, Ethereum, right? So DeFi applications are mostly built on top of Ethereum, which is an open source blockchain that, is setting itself apart from Bitcoin, really. I think it's interesting how it's done that. I know a lot of people have their thoughts on Bitcoin versus Ethereum. Myself, the reason why I see it as true internet money is because Ethereum, if you think about how money works today in society, it's money's value is derived from its applications, right? I know that if I provide somebody with $1, I know what I can get out of that dollar. I know that somebody's dollar is the same value as my dollar. That's a very basic example, actually. Devaluation of the dollar and inflation are separate things I won't get into right now. I'll try to stay easy on my opinions and my hard feelings towards the dollar for today's episode. But Ethereum is enabling new kinds of financial instruments and more customizable assets to be built than existing products and services, right? So with Ethereum, I call it digital money because it's becoming the groundworks for all of these decentralized applications, right? So when you talk about internet money, its value is being derived from how many people are utilizing it to build new concepts, to build new innovative financial applications. And I think as a whole, Ethereum's as a digital ledger allows several entities to hold copies of transactional history, right? So meaning a single central party cannot control it. And I go back towards, again, the DTCC and these financial intermediaries that are part of the public markets. You think about all the information that they're handling, right? For example, the DTCC acts as the central clearinghouse for all financial securities in the traditional financial system. That includes stocks, bonds, your derivatives, all sorts of trading products. Whereas with Ethereum, the blockchain itself acts as a decentralized clearinghouse for transactions involving tokens and smart contracts. And guess who are the people that are essentially confirming these transactions or validating that they're occurring? Billions in transactions are being settled every day because it is not a single corporation that's controlling the system or gaming it. Instead, it is people who, like you and I and various other network users, who are sitting there mining on top of Ethereum, and they're the ones who are validating these transactions. They're the ones who are confirming and making sure that these DeFi applications are working as they do, right? So, and blockchain, the way that it's made, it can't be hacked, right? The smart contracts, yes, and there have been cases of this, right, where the DeFi applications of smart contracts have been exploited because all that is lines of code on top of the Ethereum blockchain. And code can be manipulated, right? People can find out where there's soft spots within the system and they can game it. But as a whole, there's the importance of the idea that in centralized systems you need human gatekeepers. That's what limits the settlement times of transactions, and it offers users less direct control of their money and higher fees, right? Instead, I'd rather let a group of network people who are going to essentially, let's say that in order for a transaction to be validated, we need to have 50 validations or 50 confirmations. Then those 50 people are better, in my opinion, as opposed to one central authority who will have to take 2 to 3 days. Instead, it's 50 people across the globe who are going to be checking my financial transactions. Let's think about the second problem that I talked about, right? And this is the unbanked problem of the world. According to studies from the World Bank, almost 1.7 billion people are unbanked, while 2/3 of those people without bank accounts actually own a smartphone. And it's actually a funny statistic, I think, within the African continent, right? Somewhere that I'm active in and doing business and researching. Over there, 92% of people have access to a cell phone. which is very interesting. That statistic might be a little skewed because it's also focusing on more of the developed nations. Statistics were taken from Nigeria, Kenya, and South Africa. So, but still, that's still a high percentage of phones being used. And actually, in Kenya and stuff, the way phones are utilized is far more different than even us, who are the privileged people in developed countries, right? They actually use their phones to be able to do literally everything, make all sorts of payments. So DeFi applications are very interesting because they allow anyone in the world to access the financial services that are built on top of these public blockchains. And by eliminating the intermediaries and the high barriers of entry that you see with the modern financial system today, right? You guys today who are even trying to go get a loan, you're asked your credit score, you're asked your status of employment, you're asked for how much salary you made, what sorts of assets do you have, what sort of collateral you can provide, all these things like that. But today, just to be able to participate in a DeFi network, you just need to have access to a phone, really. There's, yes, you'll need to have some access to some sort of capital, whatnot, but at least you can't be prevented in participating in the system, right? There are no checks put into place that will say, hey, you can't do this because you don't have X, right? DeFi has a potential to open up the necessary financial services, including the ability to borrow funds, take out loans, deposit money into savings account, or even trade, complex financial products, all without asking for permission or opening an account anywhere, right? All the KYC might be done on top of the blockchain, but once that first process is done, instantaneously all that information will be stored on top of the public ledger. So going back to my point about the privilege that developed countries have, right? Even the privilege that we have, it's so limited because, I always say with the comfort that we have within our capital markets today, we don't really realize how inefficient it is. But imagine that you don't have access to, certain products because of your local geography, your gender, your education, your government, or some other uncontrollable situation. These situations often limit the capital formation abilities for individuals and businesses, especially like for me, from my perspective as an entrepreneur, I'm unable to get affordable access to capital, right? A lot of it in short term is very, very expensive. But with DeFi, anyone can access fundamental financial services required to help benefit them and their economic development at any point just by participating in these DeFi applications. So when it comes to DeFi today, let's talk about the main applications, right? And I think the DeFi use case can be broken down into the following categories, right? Lending and borrowing, decentralized exchanges, stable coins, synthetic assets, as well as derivatives, options, futures, perpetual contracts, as well as the prediction markets. So those are all of the potential areas that will be disrupted by DeFi. But I think the one that I want to hone in on the most is probably going to be lending, as well as the decentralized exchanges and stable coins, because I think those three are the most prominent right now. In order to understand DeFi, let's talk about the use case, right? So let's talk about financial use cases. The protocol itself that we'll be focusing on has to be permissionless, right? The code is open source that allows anyone to participate or build on top of the program itself without going through a third party. You have to be able to create an environment where people are not required to put in their personal information, right? I don't have to reveal my identity. Zero knowledge is something that is often associated with DeFi products, where I can still participate just based off of very limited ideas without giving away who I am and what I have exactly. These assets within DeFi don't have to be custodied by a single third party, and most importantly, decentralized governance, right? This is what we're about. It improves the administrative privileges are not being held by a single entity, or at least a credible path exists towards removing those financial intermediaries that are holding most of the financial products today. Let's go straight towards the Robinhood example. Is thinking about how decentralized exchanges on Ethereum like Uniswap or even SushiSwap can't be censored, right? The settlement can occur for any transaction. A block can be mined within 13 seconds. And the modern situation shows that there's very outdated technology and processes put into place in traditional financial markets, which caused for the settlement times to be T+2. I think it's if you go back to the problem, right, that Robinhood didn't have enough insurance or enough to cover the spread of all the trades being placed, right? They need to provide a certain amount of collateral. Well, what if you replace the need for one institution or one central authority to verify all this information? Instead, the institution is going to be replaced by, let's say, various lines of code, and then the collateral that's provided to allow for a trade to occur would be replaced by, let's say, a decentralized fund or a pool of crypto or some sort of funds created by a network of people, right? So the problem with, when we talk about the example with Robinhood, they weren't able to cover trades, but now let's say people are now incentivized to provide or to pool or stake out their crypto to allow for, people to utilize that, or the exchanges to leverage that to allow for more transaction or trades to occur. So I put in my crypto because, it's better than sitting down in my wallet. I put it towards staking and applications of pooling, and from there I would receive a certain amount of rewards or a certain amount of a fee back, like a percentage or an interest rate, something like that, based on the amount that I provide, the collateral that I've given that's being utilized by these exchanges to increase the volume or the number of transactions that are being filled, right? That is an interesting use case that not only allows for instantaneous settlement on top of a decentralized exchange, but also it incentivizes users to leverage the protocol and leverage their funds and put it to greater use on top of the decentralized exchanges. So it's a win-win for both the growth of the industry as well as for the individual who's not only trading but now being able to leverage the staking protocol. I think that we've gotten into some pretty good details about how these things work, but let's talk about one of my favorite examples with DeFi, and that's the lending and borrowing. DeFi itself gives any user the ability to borrow or lend their assets, right? All DeFi lending really is a replication, let's say, of what it takes to get a mortgage, where individuals will utilize their house as collateral and receive a loan against it. With DeFi protocols, you can utilize a variety of different assets as collateral and borrow any crypto assets against them, including stablecoins, right? So when a borrower, collateral value drops to below a certain, certain value to loan ratio, their collateral actually gets liquidated instantaneously to help ensure that the protocol itself will remain liquid or solvent. So that's, within itself, to prevent the defaulting of loans or defaulting of DeFi protocols or products, there are codes built into place to ensure that the provider of those funds or the borrower can't continue to hurt the system if they don't have the necessary amount to continue to add value towards a lending pool. We can talk more about these details of DeFi later. I want to ask you guys, what are the things within DeFi that are very, very confusing for you? What are your biggest questions about the growth of decentralized finance? As for my predictions for the market, I think currently we're sitting about around 40 to 45 billion in total value locked. I think by the end of this year, and this is me being very, 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 very conservative, I think the total value locked into DeFi protocols will be 100 billion. I think the value of certain protocols, my favorite being Aave as well as Uniswap, those two I think will continue to lead the blue chip DeFi growth. And then I think you'll see the emergence of more DAI, USDT, USDC stablecoins, because beyond just price stability, these stablecoins offer borderless payment systems, faster, cheaper, and more secure than traditional networks that you'll see with Swift. So those are the ones I'd say to look out for, especially if you want to learn. Sushi Swap is another one that I'm involved with. I think it's very, very interesting, especially if you can't stand a lot of the ways that the public markets function today. So I'd highly recommend people to do your own research, obviously. Going back now full circle to Bitcoin, everyone loves to hear the predictions for Bitcoin. So here it is. I think right now we're seeing Bitcoin around 50, like I said, 50K. I said by mid-March to end of March, I think it could definitely test that 60K level. And then from there, I think the summer will be the summer of Bitcoin. By the end of this year, conservative value is obviously going to be 100K. I had said that last year. I'm going to stick to it. But very optimistic side of me even sees that Bitcoin will surpass 150K and almost touch to 200,000 easily. I'd love to be wrong about Bitcoin and see it blow past those values, but let's see what happens with the crypto markets, and let's hope that DeFi continues to decentralize the world today. Thanks, and hope you guys huddle back up with us in a couple of weeks. I think we'll have a very interesting topic about angel investing, as well as how the markets are evolving to allow people like you and I to participate more than ever in private market transactions.